how does an advisor need to frame their crypto assets inside of their asset allocation? And it's easy to say alternatives, but then when you go and you model it in an alternatives bucket, well, there's a big difference between Dogecoin and Bitcoin. How do they do it?
So whittle it down. One, right? Like where are you actually wanting to put the capital, right? I would separate Bitcoin out of the other crypto assets, right? Very distinct and unique in its properties. The longest track record right now, obviously. And then the others, you have to have a unique understanding of them. One, not only for the SEC, because they want you to demonstrate knowledge of what you're putting clients in, but also what that's going to mean. Where, how do I value them, right? Based on looking at on-chain data, the community, some of the metrics that are out there, realized cap and others, right? Like, I'm going to fundamentally value these. So that's one, right? So whittle it down. Okay, we're just going to do Bitcoin. Okay, great. Then, looking to size it properly, where are you taking it from? Well, let's take it from bonds because we think bonds are going to get slaughtered, but okay. Or does it come out of equities, right? Or where does it actually fit? Yeah, you may call it an alternative, like you said, but where are you taking that money from? Or is it just fresh capital? And you say, all right, we look at the client, say, Mr. and Mrs. Client, this is just a venture bet, right? We're just going to look at it as venture. And then it's just this sleeve where advisors normally tell client, like, you got a little kitty, you got $75,000 or $100,000, go do whatever you want with it, right?
Mm-hmm.
I would bring that into Mr. and Mrs. Client. Let's think of this like that. You're just not expecting much here. An allocation that is just almost like a venture bet. You're investing in a small business or a small company. Let's look at it that way. Also, where we are right now is once you are able to do that, it's highly correlated with all risk assets now, right? It's a risk on asset, it's risk off. So now that means the correlation to equities have grown immensely, especially with NASDAQ stocks. There is peak right now volatility. This drawdown looks like it's going to be the worst ever, right? So when you look at that, you have to, okay, well, now how do we size this properly for this particular client? So I think there's a lot of things for advisors to consider. And then just straight up, because again, I hate to keep bringing this up, but I always do. The SEC wants advisors, that valuation methodology. How are you pricing it? When, right? It's a 24/7, 365 market. When are you cutting off that timeline to have a price of which you then will bill on that asset, right? Price it in order to bill. Right?
Yep.
Imagine if you are an advisor and you're doing this and you build quarterly in advance, and now you have what is happening right now, right? So there's a lot to consider for advisors here. But again, long-winded answer, but a lot for advisors to consider. Just basically wanting to do a 1 or 2% allocation for a client. All of those things need to be considered before you do that.